Hello everyone, this is Market Daily where I bring you the latest in trends and money. Today I'm going to discuss how you can become a millionaire by investing. That's right, you heard the word millionaire. Okay, so stay with me. This is 10 minutes long and you will be prepared for the next crash in the market and how you make money when everything goes down. When everything goes red, there is a way to make money without risking anything. Bear with me. So let's go. So let's use this early retirement calculator to illustrate how you can become a millionaire from investing. I will go through all the factors in this equation here. Let's say you are 25 years of age and zero investment, and your annual income is 65, which is GDP per capita, and then after tax, let's say about $60,000 for easier visualization of numbers, alright? And then your saving rate is about 10%, which is minimal. I would expect something like 20%. And income growth is at 1%. And there is no extra income, no extra expenses. So retirement spending is about the same as your current living spending. And the target withdrawal rate is 4%, which is normal. Just if you keep on withdrawing 4% from your portfolio, you can live off the rest of your life work free. An average tax rate of 7%. Let's say we go in 100% stock and no bond and no cash. Why would I do this? Let's watch this video to see what Warren Buffett says about bond.
The question we always ask you is, do stocks look expensive to you at these prices?
Well, they are definitely. If you had your choice between buying and holding a 30-year bond for 30 years or holding a basket of American stocks, there's just no question you're going to do better holding stocks. So it's more attractive than, considerably more attractive than fixed income securities. That doesn't mean they're going to go up or down tomorrow or next week or next year. But over time, a bunch of businesses that are earning high returns on capital are going to beat a bond that's fixed at roughly 3% for 30 years.
So that's why I decided to put 100% in stocks. And let's assume you have an income growth rate of 1% per year. And the stock return, let's say you invest in SP 500, it has an annualized return of 13.6% in the last 10 years. That's it. You can retire at 48 years old and still maintain the same lifestyle as you have right now, which is $54,000 spending per year. Amazing, isn't it? What if I tell you you can reach your goal at a much quicker rate? Like you just spend a short amount of time, probably 1/3 amount of time. For example, you say you're going to spend, for example, in this equation here, you're going to spend 23 years saving 10% to reach retirement, or the point where you don't have to work anymore. Let's say you manage to increase your saving rate to 20%. That means it's here 48. Now that's decreased by 4 years. But you say what? You don't want to save so much. You still want to enjoy a similar lifestyle as you are enjoying right now. I have a better solution for you. It's called the leverage index. From this graph, you can see that in the last 10 years, since 28th February 2021, the SP 500 index was at $132. And as of today, it's 390. So that's about 3 times increase, which is 300% increase. And now let's look at this. The Direxon Daily SP 500 Bull 3 times leverage. It started at $6, and as of today, it closed at $80. So that is more than, or 1,200%. Now let's put these numbers in here. So let's say you invest in SP 500 and receive a nominal return of 13.6% for the last 10 years annualized. So I put in because it's leveraged 3 times, I put in 39. Let's say, yeah, for a round number, let's say 40%. This is what you're gonna get. Just 10 years. If you do this, and in 10 years time, I guarantee you, you're gonna reach the goal of $1.5 million. See? This is amazing, right? What about, of course, because it's 3 times leverage, so if the market increases, it increases by 3 times. But when the markets fall, it also falls by 3 times. Let's look at the event of last year. The SP 500 drops from $337 to the low of $228, which is about 35% loss. But then for SPXL here, we have a drop from $75 all the way to 19.12. That is 80% decrease. But then again, if you hold through it, it rises much faster than SP 500. So the moral of the story is, whenever the crash happens, do not panic and sell all your investments, because you're gonna make so much loss when you panic sell. And I also have another things to tell you. So usually this kind of leverage ETF, they go by pair. We have bull and we have also bear pair. I already compiled a list here. So the bear and 3 times leverage every time. So let's say you want to bet into SPXL. So that's 3 times bull leverage, and then we have SPXS, that is 3 times bear leverage. So when there is a market crash, this is your friend. When the market crashes, you can always trade this SPXL for a person again. Let's say last year, right? When everything was going down, these things shoot through the roof. At one point, it even reached $275 a share. As long as you make some gain from these stocks, you can always sell here, you can sell here to make some profit. And the way I look at it, I always look at the CBOE volatility index. If this thing's going high, I will buy into SPXL, SPXS to capitalize the gain. And when the things calm down, the volatility in the market calms down, that is when I know people stop panicking and the crash kind of stop. You can always sell your risky 3 times leverage bear investment for some gain. And this gain can then use to buy other stocks that has been sold off during the crash. This helped me so much last year, where I made a lot of money from capitalize on this inverse leveraged ETF. In recent week, I also capitalized on the FNGD, which is the inverse leverage 3 times inverse leverage index, which tracking the FANG stocks group. Last week we have this massive sell-off right here. Yes, I remember this day. So because of the inflation fear, all the growth stocks has been hit very hard by people buying bonds. Okay, again, I think bond is stupid. I like Warren Buffett. I don't buy bonds, never invest in bonds, because you don't want to hold something that pay 3% or 1.5% for the next 10 years. What kind of investment is that? You just bet on an SPY. It's even easier, and it gives you a steady, normalized 9%. But that's it. And and look at this. This is the semiconductor bull 3x leverage. So you know that the world has been in severe shortage of chip. Every sectors need chips, from EV, from personal computers, from gaming consoles. Everything require computer chips, and that is why this sector is so hot. It has been increasing like mad in the last year. Look at this. It has been increased like tenfold in a single year. You gotta check these stocks out. If I don't know, if you don't think this is profitable in the long run, and I don't know what is, I personally just stick to SPXL. I bet on the American economy in general, because as Warren Buffett says, never bet against America. The country will just bounce, and history has proven time and time again holding stocks is a good investment. And again, back to the equations here. So if you follow this simple pattern and invest in XPXL, you have to expect some massive downturn when the market flip around. But don't worry, it's gonna bounce really quickly. Look at this. Just after say 5 months. Yeah, 5 months, and it's back. That's it. So why do you panic sell? Because you never know what is the bottom, right? Just stay with it. For not even a year, just 5 or 6 months in after the COVID-19 thing, everything is back to normal, and it's been rising ever since, right? So my 2 cents, just keep on buying XPXL. And because we are in the phase of economic recovery, there will be so much increase in revenue in terms of economic activities. It is expected that the growth rate for this year is going to be around 6%. So we're expecting to see the SP 500 increase by at least 6%. Now that's put into context of SPXL is going to be 18 to 20%. If you don't see this kind of equation to take you to millionaire clubs, then I don't know what is. That's all I have for today. Thank you for watching this video. Please like and subscribe, and share this to your friends if you find it very useful. And goodbye for now.